Hello friends, in this video we will talk about self-help groups in India. NABARD defines self-help groups as small economical homogeneous affinity groups of rural poor, voluntarily formed to save and mutually contribute a common fund to be lent to its members as per group decision. A self-help group have self-selected and unrelated members. They do regular savings by members, peer pressure to enforce repayment of loans, fully managed by own members, joint liability of members, simple and transparent procedures. Characteristics of SHGs. The group generate a common fund where each member contribute his/her savings on a regular basis. Borrowers are decided by consensus. The loan amounts are small and for short duration. The groups meet periodically to discuss about their transactions. The loans cover a variety of purposes including the non-traditional ones also. Loan procedure is very simple and flexible and the defaults are negligible. Linking SIFIs with banks and how it creates advantage for rural poor. It creates access to banks both for credit and savings. Money is available for them in time and for all purposes. Significant reduction in transaction costs of borrowing. Loan is available without any tangible collateral. Procedure is very simple and flexible. Loans are affordable and can be accessed conveniently. Linking SHGs with banks and how it creates advantage for banks. Some part of transaction cost transferred to group. Reduction in transaction cost of lending. Timely recovery of loan. Increased turnover with a higher margin. Peer pressure and joint liability ensures there are no defaults. Easier access to clients. How a self-help group is different from joint liability group. A self-help group is having 10 to 20 members, where joint liability group have 5 to 10 members. The primary focus of SHG is saving, where JLG is a credit group. In SHG, members can obtain funds from internal group savings, loans through bank linkage and from SHG federations. In JLG, the members obtain funds from banks or microfinance institutions. In SHG, internal loan is easily available, but it takes time to obtain external loans. In JLG, there is easy and quick processing of loans from MFIs and banks. In SHG, the rates are comparatively lower. They generally range between 12 to 24% per annum, where in JLG rate of interest starts from 24% per annum and above. Based on trust and peer pressure, if any member fails to pay, it is considered as bad debt and loss of SHG, based on joint liability or mutual guarantee. SHG involves both social as well as financial metrics. JLG involves only financial metrics. SHG is a savings-led slow growth model. JLG is credit-led fast growth model. There are many positives of SHG driven microfinance like decision making. Members make decision collectively. Convergent financial services. The rural poor needs different type of financial services like savings, consumption credit, production credit, insurance, remittance facilities and many more. The platform of SHG provides the possibility to converge these services. Supplementary to formal banking, SHG linkage does not supplant the existing banking system. Cutting costs. SHG linkage cut costs for both banks and borrowers. NPA SAVI. The linkage mechanism has proved that the repayment rates could be on a continuous basis as high as 95% to 100%. Peer pressure as collateral. The SHG linkage emphasizes peer pressure within group as collateral substitute. Client preparation. The member of SIGs could over a period of time very selectively graduate to the stage of micro-entrepreneurship. Social agenda. Many NGOs and governments have recognized the SIGs as a vehicle for carrying and deepening of their development agenda and delivery of services. Exclusive focus on rural poor. SSGs have exclusive focus on absolute have-nots who have been bypassed by the banking system. No subsidy dependence syndrome. The program does not envisage any subsidy support from the government in the matter of credit. The issue is to build capabilities and enterprises of the individual members. Impact of SHGs on women. Women have become a lot savvier about how to marshal their forces and have a much better knowledge of the system. Since most SHGs are women's group, the potential for women's empowerment is huge. It has generated a unique stock of social capital through the process of regular group meetings, and it is this social capital that has been instrumental in transforming the status of these women, both within the home and community. With the massive social capital embodied in them, SAGs have emerged as a significant part of the developmental infrastructure. There are many positives of a group model, like economies of scale, economies of scope, reduction of moral hazard risks due to group monitoring and peer pressure, mitigation of information asymmetry related to potential borrowers and savers through the group's knowledge of individual members, substitution of joint liability for individual collateral, improved loan collection through screening and selecting peer pressure and joint liability, especially if group penalties and incentives are incorporated in the loan terms. Improved saving mobilization, especially if incentives are incorporated in a group scheme. Lower administrative costs. Paths to SHG replication. SHGs replicate spontaneously without any external facilitation in the following ways. Clusters. Group often meet at the same time and in the same place, forming a cluster of groups. The visibility and dynamism of clusters attract new members, encouraging the formation of new groups. Fission of large groups, splinter groups, social entrepreneurs inspired by neighbors, natal villages, and individual upgrading also encourages the formation of new groups. Future of SHGs. Self-help groups needs to be regularly monitored and development agencies must reinforce structure and processes so that have a template that helps them run the group entirely by themselves. Resources should go toward periodic capacity building of all members to enable members to internalize the entire concept and keep renewing their confidence and vision. Exposure to ideological discourses in socio-politico-economic spheres can help groups to graduate to institutional platforms for constructive critical discussions on important agendas impacting their lives and help members become better community resources and citizens. Regular monitoring of groups can help make the group a collective and democratic effort instead of being monopolized by few better informed members. Initiation of active SHG heads into rural governance through Panchayat Raj can give them a much broader canvas to use their potential for development of female society and the village. Government should leverage the self-help group platform to expand the financial inclusion agenda. The government has launched several innovations for digitizing SHG functions and operations. Digital financial literacy and numeracy could go a long way in ensuring a smooth transition from manual to technological platforms. Some of the talented SHG leaders could be appointed as financial counselors in their villages. They are already working as Anganwadi workers and accredited rural health activists. At last, we want to thank you for giving us your valuable time.